So first of all, how do you feel about the recovery, the U.S. recovery in the economic perspective? Because we are seeing like stocks are rallying, continue upward, but data is still a little bit not convincing.
Truthfully, I would agree. I'm not very convinced by the rally we've had over the last couple of months, especially since the beginning of the year. I think a lot of our indices are obviously filled by the S&P 500, which make a lot of their money overseas. A lot of their earnings and income are derived from overseas markets. So I think that's sort of inflating the indices. When a U.S. person or U.S. individual looks in their backyard, they don't see a sunshine. They see high unemployment, low growth rate, and I think we saw by the lowered expectations for first quarter GDP that things aren't as rosy as you might think.
So do you see that we're going to go into a correction at some point during the year?
I came into the week this week after a very good performance by the S&P last month, about 4% on the upside, thinking that we might see a little bit of a downdraft. And of course, with the news coming from overseas with Osama bin Laden being killed, the markets took a little bit of a breather from what I thought was going to be a sell-off. I think we're seeing that today. The dollar firming and commodities starting to come off. Those trades also, after running up pretty well in stratospheric moves in all the commodities, finally some profit taking is about.
And if you would have to say like a level where the Standard & Poor's is going to close towards the year end, which would you say?
I'd lean somewhere right around here, between 13 and 1400. I don't think we have much more room on the upside, to be honest with you. I think we'll probably move lower in the short term to around 1335 to test that support, and from there we may test it, go lower in the mid-year, and maybe rally back a little bit. But what push comes to shove at the end of the year, right around where we are now.
And what about treasuries? We are seeing like the QE2 coming to an end.
Right.
What's going to be the next step in that market?
I think the Fed's told us they're going to let that expire, and they're going to have to let this economy float on its own. So interest rates probably tick up, which will also cause some stagnation to our growth going forward. But I think hopefully they'll feel the way I do, that we'll be able to stand on our own 2 feet. Won't be great growth, won't be stratospheric growth, but something that'll just stabilize and sort of be on an even keel for the rest of the year.
And what about commodities? Because yesterday we saw a big decrease in silver.
Right.
Why was that?
Well, yesterday I heard that the margin requirements to own and trade silver were increased, therefore taking some of the speculation out of it. You might see that in some of the other commodities as well. So I think a lot of the metals have seen a good run, and I don't expect a lot more on the upside there either.
And are we going to see a bubble in the gold? We're going to continue
I think
seeing.
we already see one of those.
And it's coming to an end, or?
I'd say again, I don't see much upside. Inflation may be picking its head up, but I think that moves already into the metals.
And just a last question, which sectors are the most interesting right now for investors?
I still think you have to stay with the agricultures. I think food and food production is going to be important. So the fertilizers and Caterpillars and the Deeres of the world, not those stocks specifically because I'm not allowed to speak about specific stocks, I must say that, but I think that group might hold its own for the rest of the year.
So thank you very much.